Hey, it's Ben, Pattern Profits, and I'm going to talk tonight about the opening range. For me, that means a 30-minute opening range. I'm on replay on TradingView, 5-minute chart, S&P 500, the ES, and that's what we'll use as our example here. I'm going to scroll through the first 6 bars here, and this is Thursday of last week. You saw initially we opened, came down here, and then established our opening range low here, moved back to the upside. Here's our opening range high. Tried to take a peek out of there to the upside, came back in. One of my favorite sayings now, the wicks do the damage, but the bodies tell the story. So keep an eye on those bodies. Pay attention to what the wicks are telling you too. Sometimes when you get that fake move, to the upside and then close back within the range means it's got some more work to do through here, typically. And that's exactly what you saw at 10 a.m. The first fair value gap after 10 a.m. noted right here. Keep in mind a fair value gap, that's a 3-candle pattern. The top of this bar, the bottom of this bar, this gives you your fair value gap right here in the middle, no wicks overlapping there. So I do pay a lot of attention to that first one at 10 a.m., especially if it comes within the opening range like we see here. So as we move forward, you'll see that we kind of danced around there a little bit, rebalanced that fair value gap, and then pushed to the upside. You did get a little shakeout here below that midline of the opening range. That's something we're going to talk about quite a bit, so keep that in mind as well. Then we did get that confirmation and break to the upside, and we'll call this a 20-point range just to make it easy. The first target on the upside, that's the 50%. That's going to be 10 points. If this is 20, it's going to be 50% of that opening range. And then you have the 100% target, which would be the full 20 points to the upside. So those would be the first targets only if I do not have time-based liquidity to target. If I had time-based liquidity up even higher, London high, Asia high, prior day high, my target would be higher. But sometimes, especially in the trending markets where we're just moving higher or just moving lower, you don't have the time-based liquidity because of that trend overnight. So this is what I use for my targets when I don't have those time-based liquidity levels that we discussed in the prior video and the ones that I share each morning. So as we move through those, you'll see that we quickly tapped into that 50%. Now, if I was able to get an entry, down here near the fair value gap without getting stopped out here, and that's something I like to do, is if I do enter on a fair value gap within the opening range, use that midline as my stop. If I'm taking the trade out of here, out of the opening range, a lot of times my stop will be placed within that first fair value gap. And same thing if we're moving to the downside, it's just reversed. So then that first target quickly hit there. And then as we move through, you'll see a lot of times these levels act as support and resistance. So we quickly tag that 100% and then start to come back in. Now, time is very, very important to me. And as you'll see, as we kind of move through this morning, we're getting late. I usually consider the morning session from 9:30 to 11:30. Ideally, I'm out by 11, certainly out by noon. I don't want to push much past that, and you'll see why as we kind of go through this. But you'll see it kind of dance around that 50% line as we move into lunchtime. Then we get that move again. If you saw the time-based liquidity that was up there that we discussed in the last video, you'd see that it's taking out some of that time-based liquidity. Then we get our move back, coming back in over the lunch period. Now, a lot of times this level, the 50%, if you push through it, it will act as support. Sometimes it will come back down to the high of the opening range, and that level often will act as support. On this day, as we come in and move into 2 o'clock, I like to have that first fair value gap after 2. Just like we talked about this one, at that first fair value gap after 10, just as important is that first fair value gap to me after 2 p.m. That one was highlighted here, kind of gives me an idea of where we're headed in the afternoon session. Keep in mind, sometimes you'll push right through there, so it's an inverted fair value gap. That would lead me to believe we're headed higher versus where in this case, we saw that red one and it just continued lower, didn't offer up much in the way of support as you came back into that opening range. A lot of times this is where you'd find support. Did not see it on Thursday. That midline here did not offer support, just continued lower and then quickly out the other side. If you saw some of the time-based liquidity that I had to the downside, you would see that basically we took it out on the upside, then in the afternoon came back through and went after some of those levels on the downside. But again, I want to separate the two. Last time we talked more about time-based liquidity. This time I'm just focusing on that opening range. So we came down through the other side, quickly to the 50% and back to the 100%. That's 20 points on the downside. And you can again see how those levels are acting as support and resistance as we move through the afternoon session. Here you see this is about 3:30. You can see the lower end of that opening range acting as resistance. And then we moved into the close. So here's your 4 o'clock close. Again, kind of staying right in that range. And I always say to keep this opening range on your chart, because as you go through after hours, as you go through Asia session, London session, a lot of times these levels will still act as support and resistance. Now, as you can see, as we're moving through the overnight session, the levels are still acting as support and resistance. Now, if you have a big earnings report, like we had NVIDIA the other day, or if you have a big after hours earnings report, you're likely to get a lot more movement. But if there's no news, watch those levels, because a lot of times they'll play an important role if you're trading the Asia session, London session, or early before the New York Open. So again, just kind of moving along here, we get to 7:30. This is typically when I'll start looking at what the action looked like overnight. How did price act in Asia? How did it act in London? What kind of pattern setting up? What kind of liquidity is still available and hasn't been taken? So now we're coming into Friday's opening range, and here's your opening range high, here's your opening range low. Again, taking a little peek, but not a whole lot of confidence in that candle. Then came back inside the opening range, back to that midpoint of the opening range, holding there. That level, always want to be aware of that midpoint level, because a lot of times it can help guide you too. On Friday, though, was a lot of chopping around early, and then you got displacement. You'll hear me talk about displacement. That's basically a fair value gap that's moving with purpose. It's giving you direction. Normally this one would be highlighted, but because it came after 11 a.m., you don't really get that highlighted, but you can see that it broke the opening range to the downside, did so again with a fair value gap there, low of this candle, high of this candle, fair value gap in the middle, came back, retested that opening range low for a couple candles, and then off we went down to the downside. Quickly to the 50%, quickly to the 100% target. And again, I pay attention to these when there's no liquidity to the downside. But for me, that time-based liquidity would come first. London low, Asia low, prior day low, weekly low, any of that would be my target first. If I don't have that, this is what I'm focused on. So again, now we're moving towards lunchtime. We've come down, met our targets down here. Again, as we're moving into lunchtime, you can expect retrace. So since this was to the downside, you can expect some retracement to the upside. We didn't get that until closer to 12:30, but now you're starting to see a retracement to the upside. And then as we move into the afternoon, you start to see the pattern developing a little more into a inverse head and shoulders pattern, left shoulder, head, right shoulder. And at this point, you've also got some resistance here at the 50% while you're seeing support here at the 100%, other than that head where we dove through. Again here, 2 o'clock. It wasn't a big fair value gap, but one to pay attention to. It was on the upside right here on this candle. Those wicks don't overlap on either side of it. Gave you a clue that we were going to the upside as well as starting to push through that 50% level. And then we really came through the opening range low, kind of held this area as support. Didn't get much in the way of resistance other than right here. Now keep in mind, this is happening rather quickly because these are 5-minute candles. So did get support a couple times here, then started to push through right through that midline, which is the one you really want to focus on if you're coming back through the range. If you tag this midline, quickly roll back over, especially given that time plays such a big role. If you've pushed through that in the afternoon session and you're headed higher, there's a good chance that you're going to take out liquidity on the other side. But even if you didn't have the liquidity targets, you still had the 50% here, the 100% here, quickly taken. This was my strategy when I first started trading futures, was just using the opening range. And then I tied it in with the time-based liquidity that we discussed in the last video. Once I pulled all that together, that's where I got the strategy that I'm sharing now. But anyway, push through. And if you see, let me put some of that liquidity on there so you can see how in the afternoon, once you started to come through here, you had the prior day's high here. You had the New York AM lows, AM highs here. You had these equal highs here. So as you started to push back through this opening range and confirm that inverse head and shoulders pattern, it was pretty clear that you were headed at least to the other side of this. If you're going to get through here to where you're testing that high of the opening range, a good chance you're going to take out the liquidity stops there from the morning. Did end up taking those. Again, displacement, and kind of told you that, hey, we're going to target the prior day's high. I did share a tweet on Friday too that I thought that's exactly where we're headed. Did turn out to be the case. But that's basically how I attack it. If I do not have a bias, especially, I lean very heavily on what the opening range in that first fair value gap tells me. I many times will come in with a bullish bias, and either the breakout of the opening range gives me confirmation of my bias, or if we get a break to the downside, maybe that keeps me out and keeps me out of trouble. So there are many ways to approach it. If I don't have a bias at all, then I just lean into it a little heavier. When you combine this, and the best way I would say to approach it is to do replay on TradingView here with just time-based liquidity, where you can see how price acts around these time-based liquidity levels, and kind of go through, get your eye trained to see those levels, how a lot of times we push through them, then reverse, push through, like for example, came through the Asia low, New York low, then reverse. This happens so frequently that training your eye to see it and being prepared for it can really help. And then taking off those sessions and just going through the opening range and kind of seeing how price reacts to those levels, what you see at those levels, how it sometimes will try to trick. If we're going back now to Wednesday, again, kind of just danced around there, but notice that opening range, a low holding and the midpoint holding, all the bodies were within there. Then you got that displacement right here just before 10 o'clock, that fair value gap as we came to the downside, that was telling you we're moving with purpose to the downside, and then took out all that time-based liquidity lower. When I was using just the opening range to kind of guide me, I would get frustrated because I would sell here, capture that 100%, but then I'd see it continue to drift lower, especially on those trend days lower. So that's what led me to the time-based liquidity to find out why is price continuing down, continuing lower. And majority of the time, that was because there was an Asia low, there was a London low, there was a prior day low, there was a weekly low. Maybe there was a level of multiple lows that we were reaching for. And that's what kind of guided me to this strategy and combining it together. So if you take what we discussed here tonight with the opening range and the breakouts or breakdowns from the opening range, combine that with the time-based liquidity that I shared in the prior video, that pretty much covers the strategy that I've been sharing here on X. Any questions, drop me a comment or let me know over on X. Be happy to answer and follow up further if that should be needed. Other than that, I hope you have a great trading week, and I'll speak to you again soon.